Alright, so let's get right into it. Are you tired of that sinking feeling when the bills are due? Constantly checking your bank account and feeling like you're just running on a treadmill? So many people are stuck in that cycle, living paycheck to paycheck. You see the images of freedom, travel, relaxation, time with family, and it feels like a distant dream. But what if I told you it's not? What if there's a clear, actionable path to break free from that grind? Want to stop living paycheck to paycheck and start living life on your own terms? Let's talk about how to achieve financial freedom. For real. This isn't about some get-rich-quick scheme or unrealistic promises. We're talking about practical steps, smart decisions, and a shift in mindset. It's about understanding the game of money and then playing it to win. I'm David, and I've been down this road, and I'm here to share what actually works. In this video, we're going to break down exactly what financial freedom means and the step-by-step strategies to get you there. We'll cover everything from crushing debt to building passive income. So, if you're ready to take control and build a life of choice and opportunity, you're in the right place. Make sure you hit that subscribe button and the notification bell. Let's do this. Alright, so first things first, let's get crystal clear on what we're actually talking about when we say financial freedom. A lot of people hear that phrase and immediately picture Lamborghinis, mansions, and private jets. They think it means being a multimillionaire, or even a billionaire. And look, if that's your goal, more power to you. But for most of us, that's not what true financial freedom is about. It's not necessarily about being rich in the traditional flashy sense. It's something much more powerful and, frankly, much more attainable for the average person willing to put in the work and make smart choices. Financial freedom, at its core, is about having options. It's about having the freedom to choose how you spend your time, your most valuable and non-renewable resource. Think about it. It's the freedom to work a job you genuinely love, even if it pays a bit less, because you're not desperate for the paycheck. It's the freedom to work, if that's what you choose. Perhaps to pursue a passion project, spend more time with your family, or travel the world. It's about decoupling your income from the hours you actively put in at a desk or on a job site. Now, to achieve this kind of freedom we just talked about, there's a fundamental shift in thinking that needs to happen. This is huge, probably one of the most important pieces of the puzzle. Most of us are raised and conditioned with an employee mindset. We go to school, get good grades, find a job, and then we trade our time for money. You work X hours, you get paid Y dollars. It's a straightforward transaction, and for many, it's the only way they've ever known to earn a living. There's nothing inherently wrong with having a job, but relying on this model can severely limit your path to financial freedom. The problem with the pure employee mindset is that your income is directly capped by the number of hours you can physically work and by what someone else is willing to pay you for that hour. If you want to earn more, you typically have to work more hours, find a higher-paying job, or ask for a raise, all of which have their limits. You're essentially renting out your time. And if you stop working, whether due to illness, job loss, or just wanting a break, the income often stops too. This creates a constant pressure to keep trading time for money, making true freedom elusive. The shift you need to make is towards an owner or investor mindset. Think about it. Business owners and investors don't just trade their time for money. Okay, let's get practical and talk numbers, because financial freedom can feel a bit vague until you quantify it. What you need is your freedom number. This is, simply put, the amount of money you need to have invested so that you can live comfortably off the returns those investments generate indefinitely, without ever having to actively work for money again if you don't want to. Knowing this number is incredibly powerful, because it transforms a fuzzy dream into a concrete, measurable target. It's your personal finish line for financial independence. So, how do you figure out your freedom number? It's actually not as complicated as it sounds. The most common way to estimate it is based on your annual expenses and something called the safe withdrawal rate. A widely discussed safe withdrawal rate is 4%. This means that, historically, you could withdraw 4% of your invested portfolio each year, adjust for inflation, and have a very high probability of your money lasting for at least 30 years, often longer. So, to calculate your freedom number, you take your desired annual income in retirement, which should cover your expenses, and divide it by 0.04 or multiply by 25. Let's break that down with an example. Suppose you determine that you need $50,000 per year to live comfortably, covering all your housing, food, transportation, healthcare, and a bit for fun. Using the 4% rule, you would take $50,000 and divide it by 0.04. That gives you $1,250,000. Next is debt demolition, your first major battle for freedom. Alright, now that you have a vision and a target number, let's talk about one of the biggest roadblocks to financial freedom: debt. Specifically, I'm talking about high-interest, non-strategic debt. Think credit card balances, personal loans with crazy rates, payday loans. This stuff is financial quicksand. It actively works against you, siphoning away your income through interest payments and making it incredibly difficult to save, invest, or get ahead. If financial freedom is the goal, then consider bad debt your arch nemesis. It has to be dealt with, and decisively. Your absolute priority should be to eliminate high-interest debt as aggressively as possible. We're talking about credit cards charging 18%, 22%, or even higher. The interest on this kind of debt is a guaranteed negative return on your money. No investment strategy is going to reliably outperform that kind of interest rate risk-free. So before you get too deep into investing, you need to staunch this bleeding. Every dollar you pay in interest to a credit card company is a dollar that's not working for freedom. It's working for theirs. Next is the safety net: building your bulletproof emergency fund. Once you've made significant headway on your high-interest debt, or ideally eliminated it, the very next crucial step is building an emergency fund. I cannot stress this enough. Do skip this step and jump straight into aggressive investing. An emergency fund is your financial shock absorber. It's the buffer between you and life's inevitable, unexpected, and often expensive surprises. Without it, a single unforeseen event, a job loss, a medical emergency, a major car repair, a leaky roof, can derail your entire financial plan and potentially force you back into debt. Think of your emergency fund as your personal insurance policy against financial disaster. It provides peace of mind, knowing that if something goes wrong, you have a cushion to fall back on without having to panic, sell investments at a bad time, or rack up credit card debt. It's what allows you to weather storms without capsizing your financial ship. This isn't dead money sitting around. It's actively protecting your journey towards financial freedom by preventing setbacks. It's a foundational piece of financial stability. Alright, you've battled bad debt. You've built your emergency fund. Now we get to the really exciting part, making your money start working for. This is where the owner-investor mindset truly comes into play. The goal here is to build streams of passive or semi-passive income. This is income that you earn without having to actively trade your time for it, day in and day out. It's the engine that will eventually power your financial freedom, allowing you to live off your assets rather than your labor. One of the most accessible ways to start investing for passive income is through the stock market, specifically with low-cost index funds or exchange-traded funds, also known as ETFs. These funds allow you to buy a small piece of hundreds or even thousands of companies all at once, providing instant diversification. Over the long term, the stock market has historically provided solid returns. You can benefit from capital appreciation, which is the value of your shares going up, and with many funds, dividends, which are a share of company profits paid out to shareholders. The key here is consistency and a long-term perspective. Don't try to time the market, just invest regularly. Another classic route to passive income is real estate investing. This could involve buying rental properties where the rental income covers your mortgage, expenses, and hopefully provides some cash flow. While managing properties can be active, you can also hire property managers to make it more passive. Now, we've talked about earning more, investing wisely, and building passive income. But there's another critical piece of this financial freedom puzzle. And honestly, it's often the one people struggle with the most. Even though it sounds deceptively simple, it's the secret sauce, if you will, consistently living below your means. This means spending less money than you earn, period. It sounds like common sense, right? But in our consumer-driven society, with constant pressure to upgrade and acquire, it's a discipline that requires conscious effort and intention. One of the biggest traps people fall into is lifestyle creep. This is when your spending gradually increases as your income goes up. You get a raise, so you get a nicer car. You get a bonus, so you upgrade your apartment or buy a bigger house. While it's natural to want to enjoy the fruits of your labor, if your expenses rise in lockstep with your income, you'll never actually get ahead. You'll still be living paycheck to paycheck, just a fancier version of it. The gap between what you earn and what you spend is where your power lies. That gap is what you can use to pay off debt, save, and invest. So how do you actually live below your means in a practical way? It starts with awareness. Alright, let's quickly recap the roadmap to financial freedom. It's about choice and peace of mind, not just being rich. Shift from trading time for money to building assets. Calculate your personal freedom number. Eliminate high-interest debt. Build a 3 to 6 month emergency fund. Invest for passive income through stocks, real estate, or digital products. Live below your means and avoid lifestyle creep. This is a journey, not an overnight transformation. Consistency is key. Take it one step at a time. Focus on one area, like tracking spending or paying off debt. Small, consistent actions lead to massive results. So there you have it, a comprehensive step-by-step guide to unlocking your financial freedom. We've talked about the mindset, the numbers, the strategies for tackling debt, building savings, and investing for a future where you are in control. Remember, this isn't just about accumulating money. It's about designing a life that gives you options, peace of mind, and the ability to pursue what truly matters to you. The path won't always be easy, but with consistent effort and the right knowledge, it's absolutely achievable. If you found this breakdown helpful, if it sparked an idea or gave you some motivation to take that next step, do me a huge favor and smash that like button. It really helps the channel reach more people who need to hear this message. And if you're serious about building wealth and achieving true freedom, make sure you subscribe and hit that notification bell so you don't miss out on future videos packed with actionable advice. We're building a community here of people committed to financial empowerment. Now, I want to hear from you. What does financial freedom mean to you personally? Is it a specific number, a lifestyle, a feeling? Let us know in the comments below. Sharing your vision can be a powerful motivator both for you and for others in the community. Thanks so much for watching. Take that first step today, and I'll see you in the next video.